Well, guys, we've certainly got ourselves into an interesting situation here. As you know, the Bank of Canada raised its key prime rate last week to the tune of 0.25%, bringing it up to a total of 4.75%, which is the highest since 2001. And it's really interesting to see because what people think is going to happen with real estate and with the economy in general is it's anybody's guess. Based on the research I've done, there are the majority of economists got it wrong, thinking that they were going to hold it tight, just based on the fact that a lot of economists, the top economists, say that in order to really see the full effect of the increases that we've made, it can usually take about 18 months to work itself through the entire economy, and that the Bank of Canada right now is a little bit panic-stricken. And even after 6 months of rate increases, the real estate market in Toronto was very strong, especially in the downtown area, posting continual gains and lots of competition with very, very tight conditions. And it's noisy here, and it's one of the joyous things about being on the move. I'll just edit that out afterwards, so no big deal. But but there's a couple of key things that I noticed, again, based on the people that I've spoken to and the research that I've done, is that on the one hand they're trying to trigger a recession in order to bring prices down and lower demand. But I think we're living in a time and place where that's not necessarily the case, because it's just not happening. For the last 3 years now. And part of the reason why is just because of the overlay or the in the wake of COVID. I personally think that this will kind of naturally peter itself out once people get it out of their system from being locked up for 2.5 years. And all this stuff about the market being this and the market being that. And when I say the market, I mean the real estate market. And and a lot of people are asking me, well, what do you think is going to happen with these latest rate increases? Personally, I think if it keeps going, there could be a little bit of a lull, because whenever there's policy changes of any kind, there's always a bit of a slowdown and a bit of, well, I want to watch and wait and see what happens. I've had lots of conversations over the past few days where people have made that their kind of their mandate. So, but the other interesting thing is that the Bank of Canada is also concerned about debt levels. So there's a lot of conflicting information here. So, worried that Canadians are carrying too much debt and this and that. And well, it doesn't take a rocket scientist to figure that out, that with increasing costs of borrowing, it just makes debt levels that more unmanageable. So I don't know, how they see this playing out, but I definitely sense that there's a little bit of panic, and I kind of buy into this idea to make the changes and give it a full-on chance for itself to work itself through the system. So anyway, this is just based on the research that I've done. It's going to be interesting. It will be interesting to see what happens. But I do think that over the next while, even though we will be seeing a market slowdown anyway in July, because that's the way it usually is that there could be some buying opportunities for people. So stay tuned. Any questions? Let me know.